It looks like it's staying strong here. Hawaiian Airlines is the latest of the group of airlines to reaffirm that people are eager to go on vacation. The airline beating on both the top and bottom lines in its most recent earnings report, helped in part by demand for domestic leisure travel. Here to discuss, Hawaiian Airlines CEO and President Peter Ingram. Peter, it's great to see you again here, and congratulations on what was another strong quarter here from the airline. In the earnings call, I was reading through the transcript, and you characterized the start of this year as encouraging. What does this signal not only for the current quarter, but looking out to the summer travel season?
Well, thank you very much. It's good to be with you. We're really encouraged that demand is strong in the vast majority of our markets. We've seen a strong recovery over the last couple of years. The first quarter, especially January and February, is a little bit of a seasonally weaker period for leisure travel after the holidays and before spring break. But our revenue was on track, a little bit above what our original guidance was for the quarter. We've seen good demand from our largest market, which is the U.S. mainland, to Hawaii, and we're really encouraged about the outlook for the rest of the year.
Peter, you also did the warn of several operational challenges. How do you see this affecting your path back towards profitability?
Well, I think there's a couple of things in the near term that we're going to have to be dealing with, and we talked about those on our financial results call last week. Specifically, there's been a construction project here in Honolulu to refurbish the main arrivals runway at the airport. That has been ongoing since October. It's been delayed a couple of times, and we've got about one more month to go. It's on track, hopefully, to be completed by the end of May. And that's really disrupted particularly our neighbor island flights, the highway system between the islands of the state of Hawaii, where we've had air traffic control delay programs in place on an almost daily basis. We've made adjustments where we can, but it's not enough to overcome it. And that is something we're looking forward to being completed as the construction project completes. And then the other challenge we talked about is the availability of engines for our A321 Neo fleet. That is something that's been ongoing for several months now, as the supply chain challenges faced by Pratt & Whitney, the manufacturer of those engines, has meant that we've had a handful of airplanes grounded at various points during the period. We're hoping to see some improvement over the next couple of months, and we just had a couple of aircraft in the last week or so go back into service. But these are the sort of operational challenges that our guests expect us to solve. And so we're working very hard, and our team's doing what they can to mitigate any impact on their travel plans, especially as we get into the busy summer travel season.
So, Peter, that timeline of returning to profitability, what do you think, I guess, that realistically looks like at this point, given those challenges?
Well, I don't want to put a specific timeline on it. I think we're going to see better results over the next couple of quarters as we move into a more peak period of the year. We've got a couple of idiosyncratic challenges related to the markets we serve, particularly with Japan outbound leisure travel, which was a little under 20% of our business before the pandemic began, and with some of the pricing in our neighbor island market. I am encouraged that we have seen some green shoots of life from the Japan travel market, and we've started to see a little bit of signs of demand picking up. It's still a long way from where it historically has been, but I think there's a great affinity for Japan travelers to come to Hawaii, and that is going to be resilient over time, and we expect that to recover as we move through this year and into 2024. And we think 2024 we're set up, much better with changes in a couple of parts of our market that we expect to continue to have some room for recovery.
Yeah, Peter, what are you seeing just in terms of pricing power and whether or not that's going to hold this year? You mentioned the fact that you are under some pressure from some of your competitors out there, what they're offering, also some of the, slower rebound that you are seeing out of your Japan travelers. Are you able to price where you want to price, and how do you see that trend continuing this year?
Well, the industry is very competitive, and that's been true for my entire career. We've got to deal with the market conditions that exist, whether it's North America to Hawaii and the neighbor island markets or internationally. Our team has done a very good job of responding to that. Our frontline teams deliver outstanding service and hospitality, and generally, when the prices are where prices will be in the market, but when people have a choice to fly Hawaiian Airlines in the markets we serve, that's who they want to fly, and that's what they choose. And as long as we're outperforming our competitors, we believe over the long term we're going to be successful, and I think we continue to do that, and we've got a bright future.
Speaking of your competitors, a number of your competitors have not been able to reach a new contract with their pilots. You did back in February. What are you seeing from that perspective, the edge that this potentially gives you? And where do things stand on the staffing shortages, the challenge that I know has not only affected you, but all of your competitors within the space?
Well, I'm very pleased with where we are right now on from the standpoint of our labor relations. We have negotiated new contracts since the beginning of the pandemic with all of our major collective bargaining groups, culminating with that pilot agreement that was reached in the early part of this year and ratified at the beginning of March. So we don't have any amendable contracts until 2025 at this point, and that's, I think, an enviable place to be, where there's continued uncertainty on some other properties with regards to the labor outlook. We've got a picture of what our cost structure is. We've got competitive rates for all our labor groups. Right now, we're able to hire the people we need. We did a lot of hiring over the course of 2022 as we rebuilt our airline, and I feel very good about where we are right now. That's not a constraint at all for us. We've worked through some of the challenges we faced in our training backlog last year. There were a couple of specific areas around certain airports where hiring ground staff is tough, and we'd like to still recruit more mechanics, but by and large, labor availability is not something that's troubling us right now based on where we are.
Great news there for your business. Peter Ingram, CEO and president of Hawaiian Airlines. Always great to have you. Thanks so much for joining us.
Thank you.